In this video, I'm going to share with you my whole dividend portfolio and my rationale, my simple rationale for investing in the companies that I do. Hi, I'm Simone, and I'm just an ordinary person who's been investing in property since 2005 and in the stock market since 2014. My aim for this channel is to document and share with you my journey and hopefully to inspire some of you to invest along the way and to show you that the stock market isn't really as risky as some people think. This video is not financial advice. It's purely for educational and entertainment purposes only. Quite a few years ago, at the beginning of my journey, I noticed small amounts of money being deposited into my Hargreaves Lansdown share account, and I didn't know where it was coming from. I just thought, thank you very much, and I kept reinvesting the money into buying more shares. It was some years ago that I learned about dividends and realized that that's what the money was. So, at the beginning of my journey, I had invested in companies like Nintendo, Rio Tinto, ConocoPhillips, and the Lindsay Train Equity Fund, which were all paying me dividends. I invested in Nintendo, Rio Tinto, and ConocoPhillips simply because Motley Fool, a share recommendation company, had recommended them. I'd never heard of Rio Tinto or ConocoPhillips before, but the Motley Fool provided some background information and I just trusted them. I still hold Nintendo and Rio Tinto even today, and I still invest in Rio Tinto because it's actually one of my best dividend payers in my portfolio at the moment, currently paying a 6.8% dividend yield. I sold out of ConocoPhillips before I knew about dividends, and I didn't know anything about the company. But I wish I hadn't, because they're actually a solid company. It goes to show you don't have to know everything about investing before you start. In the case of Lindsay Train, I bought that because I read a book called How to Own the World by Andrew Craig. There's a link in the description below, who recommended diversifying your assets and buying into a fund. And I liked the name Lindsay Train, so I did. It's a great book, by the way. They proved to be a decent dividend payer, and my investment doubled. And I recently sold out of them because that investment was in my taxable share account, and I reinvested the funds in my stocks and shares ISA, which is non-taxable. So any returns I make will never be taxed. Nowadays, as mentioned, I have a stocks and shares ISA with Trading 212. I no longer trade through my Hargreaves and Lansdown account, but I still have a few shares just sitting in that account, notably my Nvidia shares, which have gone up 28,000% and do pay a very minimal dividend of about 0.02%, but hopefully over the years that will grow. In my Trading 212 account, at the moment, I have a mixture of US stocks, UK stocks, and European ETFs or UCITS. At the moment, 212 are giving away a free stock worth up to the value of £100 to anyone who signs up using my link that is in the description below by just depositing £1 into the account. You've got nothing to lose, and it could be the start of a successful investing journey for you. The US stocks I currently invest in are AbbVie, paying a dividend of 4.09%, Altria, paying 7.96%, Alphabet, better known as Google, and Apple, who have only both just started paying dividends and pay dividend respectively of 0.25% and 0.43%. Coca-Cola, who have a dividend yield of 2.85%, J&J 3.72%, Microsoft 0.71%, more Nvidia at 0.02%, PepsiCo 3.04%, Starbucks 2.3%, and Vici around 5%. I invest also in Realty Income, a real estate investment trust, known as REIT for short. And its tenants are large, well-known retail businesses. The UK dividend stocks I own are British American Tobacco with a yield of 8.81%, Greencoat UK Wind paying 8.24%, Legal and General at 9.21%, National Grid at 5.81%, and Rio Tinto paying around 6%. The one Australian stock I hold is called BHP, and they pay a dividend yield of 5.2%. The ETFs or UCITS are the iShares or BlackRock's Core 100 FTSE Fund and Vanguard's High Dividend Yield Fund and their S&P 500 fund. As you can see, it's a pretty well diversified portfolio with stocks not just in one country and not just one investment vehicle, that is, stocks and ETFs, and not all in the same industry. It's important to have a diversified portfolio so you're not just relying on one stock just in case they fail in the future. AbbVie is a pharmaceutical company. Altria and British American Tobacco are tobacco companies. Nvidia, Google, Microsoft, Apple are all technology companies. Coca-Cola and PepsiCo fall under the consumer goods industry. Rio and BHP are mining companies, and National Grid and UKW fall under the energy category. Legal and General is financial, and Vici and Realty Income are real estate. So I'll explain now how I choose the companies to invest in. Generally, I choose financially stable, well-known, high-caliber, large-cap companies that have a good history of paying out dividends. Large cap is short for large capitalization. Companies with a large market capitalization of over $10 billion. Trading 212 has a section called Key Stats where this information can be found. I'll then look at the general information section in Trading 212, where it will tell you what the company does, what industry it's in, and how many employees it has, just to confirm that it's a large size. I usually expect this to be in the tens of thousands. I'll then check to see if the company is financially stable. I'm not an expert when it comes to company finances, but I can read charts. So I look at the charts in the financial section of Trading 212. I'll check the income statement, which shows very simply the company's revenue and the company's net income. As long as the net income is high, I'm happy. I'll also look at the balance sheet, which shows total liabilities and total assets. As long as the assets cover the liabilities with a few billion in difference, I'm satisfied. I'll also take a look at the cash flow, but I'll be honest, I don't really understand that yet. If those are all positive, it's time to consider the company's place in the market. Is it a market leader and does it have an economic moat? A term coined by the greatest dividend investor in the world at the moment, as far as I'm concerned, who I respectfully refer to as Uncle Warren, meaning that it has a competitive advantage, such as a unique product or a brand name, like Apple or Microsoft, for example. A moat helps the company to keep its market share and profitability even in the face of competition. Once these things have been established, I'll then check the dividend yields using the website called Dividend Max, which again I'll put the link in the description below. The dividend yield of the stocks I invest in vary greatly, from 0.02 from Nvidia, which I don't invest in for the dividend yield, to 9.21 from Legal and General. The companies I invest in are known as either dividend aristocrats or dividend kings. A dividend king is one that has paid out and grown its dividend for the past 50 consecutive years. Companies like Coca-Cola, Johnson & Johnson, PepsiCo, Altria, and AbbVie. Aristocrats are members of the S&P 500, the US stock market, that have increased their funds for at least 25 consecutive years. Realty Income falls under that category, and Realty Income are also known as the monthly dividend payer because they pay out monthly. I'll pop links in the description below to lists of the dividend kings and dividend aristocrats. So that's how I choose stocks to invest in. My investing strategy is to boost my income in my retirement and to build a legacy that I can pass on to my daughter with the dividend stocks that will just keep paying out forever. I hope you found this chat interesting and given you some food for thought. If you've enjoyed it, I'd appreciate if you give it a thumbs up. And until next time, thanks for watching and take care.